$1.24 billion in fixed income trading beat Goldman Sachs for the second quarter in a row. And Morgan's equity trading also outperformed Goldman's. Joining us now to wrap up the earnings season for the big US banks is Devin Ryan of JMP Securities. Devin has an outperform rating on Morgan Stanley with a price target of $49. Devin, it shouldn't be about comparison with peers, but it is. Were commodities the problem here? Because Goldman stuck by commodities and had a terrible quarter. Morgan Stanley started to divest its commodities units back a while.
Yeah, I think commodities was probably one of the areas for Goldman that was more challenged, and so they're disproportionately levered there, and so that was probably one of the points. The other point is just in kind of client mix. Goldman Sachs tends to be a little bit more levered to institutional money managers. Some of the other banks are a little bit more levered to corporations, and so in this backdrop that we're in, where volatility is low, asset prices are at highs, institutional money managers are largely sitting on your hands. And so in that environment, trading can be really tough, especially when that's the majority of your clientele.
Across the banks, why were net interest margins, net interest income so disappointing for the most part?
Yeah, I think there's a couple things. We saw securities yields actually come down a little bit in the quarter, and so the long end of the curve came under some pressure. On the front end of the curve, we saw rates move up, and that was a positive. And the other point is that we're seeing really good deposit betas, which are essentially the percentage that companies are passing through to their clients. So I think we actually are seeing a nice uplift in net interest income for a number of companies. Some of it's going to come in on a lag, so you just didn't see it all this quarter. But I think going forward, you'll continue to see the net interest income moving up for a number of the banks.
Yeah, Devin, on that note, I've just got the 2s, 30s curve here. Of course, you'll be really familiar with this. The trend has been for flattening here. Who is this good for? Who is it bad for out of the financials that you cover?
I think that a number of banks have really positioned their interest rate sensitivity where they're shorter in duration, which means they're going to benefit more from the move in the front end of the curve, which is the Fed funds rate. Longer term, I don't think banks like to see a flattening yield curve because it's just more difficult to make money. So I'd say they're all in a fine spot for now, but if the yield curve continues to flatten, that will become a more difficult environment. So something we're keeping obviously a close eye on. I think the net interest income story for a number of banks is still very positive. It's been a big driver of the shares, and I think it's something that will continue to support further appreciation. But clearly, we're going to keep an eye on kind of where the yield curve is moving to.
Yeah, and as you go into the summer as well, Devin, you're going to start taking a bit more of a tactical position, I'm assuming, in the financial sector. Can you talk us through how you're going to do that?
Sure. Well, if you go back to June, I would argue that financials, they had come off quite a bit from the highs, or the kind of the post-election highs. And so, we made a call that financials have become pretty attractive at that point. From June on to today, you've seen some pretty big appreciation. Some of that, I think, has been, you had the Fed hike. Some of it was positive CCAR results from a number of the big banks. For us, we're looking more for firms where outside of a big macro call, something that comes either from regulation or the backdrop where you're still going to see some earnings growth. And so Morgan Stanley's been a name that we've favored in that environment in kind of the big banks. We have some other names that we like. E-Trade is a name that has some of the interest rate sensitivities, but there's some other elements of the story there. So we think you do have to be a little more tactical here because valuations have appreciated quite a bit over the past month and a half or so.
So Devin, I wanted to bring attention to one of the things that Morgan Stanley's CFO said on the conference call, saying investors' psyches are still fragile. Now, that gels exactly with one of our stories today, which is, in fact, a poll showing that Main Street doesn't trust Wall Street or corporate CEOs at all since the financial crisis. We're talking about 31% of Americans trust corporate CEOs. So can the likes of Jamie Dimon, can the likes of Lloyd Blankfein, who have started to try and have a voice in public policy, can they influence that?
Well, I think that it's a slow progression here. So I think it's maybe frustratingly slow, and I think that's probably to the investor psyche. You had the election, and following the election, you had kind of this euphoric feeling because I think people, both institutional investors and retail investors, felt like we were moving back to an environment where regulation was going to slow and that we'd maybe move into more of a reflationary backdrop. And here we are, well over 6 months later, and really not that much has been accomplished, I think, where people could point to and say, this is really going to significantly help the earnings power of a number of firms that are going to be affected. So I think that's kind of playing through. And so that's also probably playing through to this element of low volatility, investors sitting on their hands. We need more direction around, what the policy is going to be in D.C., what's going to happen with tax reform. There needs to be a health care bill. And so I think those are things that, unfortunately, we're focusing a lot of time on as much as we are on the actual corporations and their earnings, because those are such important drivers for financials right now broadly.
What's your forecast for the bank stocks, the major banks, the 5 big ones for the next year or so?
I think you have to be tactical. We've had this big recovery in shares. Expectations are quite a bit higher today than they were, even a few months ago. And so we really like Morgan Stanley still. We think that they have a great story both around earnings as they benefit from higher client asset levels, which is going to help their fees. They're going to benefit from higher interest rates, but they're also going to be returning a lot of capital to investors. So I think that's a name that we would focus on. But more broadly, like I said, I just think you have to be really picking your spots here after we've had some nice moves.
All right, Devin Ryan, bank analyst at JMP Securities. We have to leave it there, but I do want to show our viewers something particularly exciting. It's a new function that we have on the Bloomberg. If you look up an equity and then type GP space TV, and then if you dated for about a month back, you'll see all sorts of TV clips that are attached to certain dates during that month and a list of stories related to that particular company. So that's an exciting thing for you guys to check out today. Again, our thanks to Devin. Let's check in now on the First Word News. Here's Emma Chan.